Hey guys, hope you're well. So what I'm going to do is I'm going to go over all the setups that took place between Monday the 17th up until Friday the 21st of July. So starting with sort of a nice weekly overview, we can see that the preceding week, so the week from Monday the 10th of July, was incredibly bullish. And obviously, we've seen that prices obviously traded into multiple higher time frame targets, such as the monthly imbalance, the weekly buy side liquidity pool, as well as, of course, the daily buy side liquidity pool as well. Not only this, also on the daily time frame, we've seen prices given over 6 days of price rallying into a buy side target. So on Friday, we'd obviously see the beginning of what looks like a reversal. So it's for a session of drop. So our bias, obviously coming into Monday, is one bearish session of drop on the daily time frame. So therefore, bearish is the appropriate bias going into Monday. Now, in terms of the next draws on liquidity on the daily time frame, we can see the next draw on buy side liquidity is, of course, the swing high right here. And we can also see that the next draw on sell side liquidity is, of course, this imbalance down here. Now, not only this, of course, what we're now interested in seeing is obviously price either trading into buy side or sell side following the reversal that is taking place. So on the 4-hour time frame, right, what we're looking for now is where we are within the current cycle. So we can see that price had obviously left relative equal highs at this level 3 expansion, right? So we've seen the third expansion and we've seen an extension of that third expansion right there. So just before the European Open, we can see the next draw on buy side liquidity is this imbalance down here, and the next draw on sell side liquidity. So the next draw on buy side liquidity is the swing high, also the relative equal highs, and next draw on sell side liquidity is this imbalance down here. Okay. Now price is at level 3, so we are still within that level 3 accumulation on the 1-hour time frame, not on the 4-hour time frame. Now, going into the 1-hour time frame, again, so what we're now interested in is, of course, just where price is just before the European Open. All right, so just play that, take a look. So we can see the price has delivered 2 bearish expansions. So we have this initial level 3 accumulation. Price obviously gave a bearish break, retested, and now we're seeing obviously that first expansion and then second expansion after the retest of the bearish order block right here, right? So now that we're obviously firmly within a second bearish expansion, we're interested in looking for an opportunity to trade a bearish continuation to the downside. So taking a look on the 15 minutes time frame, right? So just before the European Open, we can see the price has created a very defined accumulatory range. And in the European Open, price gave a bearish break outside of that range. So our area of interest is, of course, going to be to sell within this bearish order block. So London Open, we can see the price traded into the bearish order block. So we're just going to go down to the 1-minute time frame just to identify that entry confirmation. So after trading into the bearish order block, we can see the price gave a secondary break of market structure right here. Okay. So secondary break of market structure. So obviously our area of interest to go short, to go long is of course going to be to enter within the 1-minute imbalance. Okay. So entry within a 1-minute imbalance, stop loss goes 5 pips above the high right there. So the recent high that was created. There we go. It's a short position at the imbalance with stop going 5 pips above the high. And again, you can always adjust your entry within the imbalance. So you could either aim to enter at the tip of the imbalance, which is the optimal entry point, or you could enter at the high of the imbalance. And then your first target should be the recent low. So in the case of BRC, you want to ensure that you can get a 1 to 2 to the recent low as the minimum risk reward. And then of course, your secondary target could either be, so again, if we go down to the 15 minutes time frame, right, just to see where price is, right, within the context of where price is, one could either aim the secondary target objective at the close of the 4-hour imbalance. And of course, considering this is a reversal scenario, right, there's also a short-term low down here that one could aim for. But we'll just keep this reasonable for now in terms of the textbook way of trading this kind of situation. So TP1 recent low and TP2 should be that 4-hour close of that 4-hour imbalance below. Okay. So of course, we can see the price traded into our entry point, right there. Let's take a look. There we go. So we can see price obviously traded into the entry point, and then just hung around for a bit before eventually, obviously trading a little bit higher and hitting the stops. Now in this case, right, obviously a re-entry is always a big part of our trading plan because the first entry may not always work out in the way that we anticipate. So if we get stopped out in a purge scenario, so for example, vector acceleration above that high, then obviously this is just a case of price purging above that recent high. So what I do in this case is I would anticipate price essentially trading back into the range and closing below the 13 EMA. So I'm just going to make the 13 EMA visible on this, right? So what I'll be anticipating is, of course, price trading back into the range, closing below the 13 EMA. And the moment I see that happen, that is when I will trigger a market execution order, right? Where price closes below the 13. And then a stop will still go 5 pips above the new high, right? And then, of course, the profit objectives would still be the same, right? So the profit objective would still be the same. So it'll still be the recent low as the first target. And then the secondary target would, of course, be the low of the 4-hour range, so the H4 SST, okay? So we can see what happened is obviously price, traded just a little bit higher, filled the imbalances, took out the recent high. So again, it's a lot of accumulation that's going on. That's why it's important to just have that precision entry, have the stop loss in a good distance away, and then just wait it out, because what eventually happened was that price gave a bearish continuation to the downside and took out not only did it price obviously trade into that recent low to the downside, price also filled that 4-hour imbalance as well, which is where our final profit taking objective was. So TP1 was hit at the recent low, and TP2 was hit at the H4 imbalance below. Okay, so this is Monday's scenario. So Monday's setup was a BRC, but one would have needed to have re-entered the initial entry in order to have capitalized from the continuation to the downside. Okay, now let's go into Tuesday. So obviously going into Tuesday, we'd seen Monday price giving us 2 bearish sessions of drops between Friday and Monday. So obviously our bias is still generally bearish in line with the current daily bearish cycle. Of course, the AOI is, of course, there's still our daily imbalance. Our new draw on buy side liquidity at the close of Tuesday's candle is the swing high right here. Okay, I'm just going to get rid of my 13 EMA because again, I only need that when looking at re-entries on here. So now if we go down to the 4-hour time frame, okay. So just again before, so just going to move the daily session line to the next day right there. Then going back to the 4-hour time frame. What I'm looking for is, okay, just before the European Open, where are we? So just before the European Open, we can see very clearly that price obviously is traded back into this initial range. Not only this, we can see that price is also traded outside of our accumulation range, giving us an initial bearish expansion to the downside. So on the 4-hour time frame, our bias is very clearly bearish because we now have that #1 bearish expansion to the downside. So obviously what we're interested in is trading a bearish continuation to the downside. The next drawn buy side liquidity is the swing high, and the next drawn sell side liquidity is the swing low down here. Now going down to the 1-hour time frame, right there, we can see on the 1-hour time frame the price has delivered on 1, 2, and 3 bearish expansions to the downside. So we have a full bearish cycle coming down. Now, from this point onwards, of course, what we're interested in seeing is some sort of a bullish reversal. So we can see that price is obviously giving us that initial high from the accumulatory range at level 3. So we can anticipate that price is likely going to give us a trade above this high. But of course, it's important to note that the 4-hour time frame is a bearish cycle. So therefore, our AOI would be to either sell from a short-term high or to buy towards a short-term high. So either sell from a short-term high or buy towards a short-term high, depending on the kind of opportunity that the 15 minutes presents to us. So we can see that on the 15 minutes time frame, right, price is traded into our bearish order block, right? So our AOI, of course, is we've seen a bullish break outside of the range. We want to obviously be looking to either buy from the order block, but we also want to wait for price to take out either the H1 BST or the H1 SST or the H4 BST or SST. Okay. So price obviously trades into that bullish order block, but doesn't take out the 1-hour BST or SST target quite yet. So we just simply need to wait for price to do so. And then, of course, after a period of time, just before, so this is like after our trading hours in the London Open, we can see the price finally takes that, gives us that bullish break above the H1 BST after trading into the bullish order block. So now personally, because of course price has already given the move outside of our trading hours, there isn't any setup in the London Open. But if this scenario was to occur during the London Open, then this would be most likely a break retest reversal 1-minute variation, where we take a break of the order block, the break off the Asia range, retest of the order block, and then when price takes out the recent high, we're taking a 1-minute confirmation to sell to the downside. But where time is important, and this is obviously taking place outside of the optimal time that we trade in, there is no setup. There was no setup on Tuesday morning for pound dollar. So now let's go into Wednesday. Obviously Wednesday, because on Monday we'd seen the price is obviously giving us a bearish move. No, so Friday we'd seen bearishness. Monday we'd seen bearishness. Tuesday we'd seen bearishness. So we've seen 3 bearish sessions of drop on pound dollar. So of course we could anticipate some sort of a correction or a potential bearish continuation where price could seek to fill this imbalance to the downside, or price could seek some form of buy-side liquidity before a potential bearish continuation. Now, taking a look on the lower time frame, so on the 4-hour time frame. So again, just to forward play this just before the European Open, we can see very clearly that before the European Open, price is still within a bearish expansion on the 4-hour time frame. Specifically, we are in that second bearish expansion on the 4-hour time frame. So we can still anticipate bearish continuation to the downside based on the 4-hour cycle. We can see that price, obviously, the next drawn buy side liquidity is this imbalance, and the next drawn sell side liquidity is the swing low down here. So if we go down to the 1-hour time frame, because we are still looking for shorts on the 1 hour, on the 4-hour. On the 1 hour, we can see that yesterday, obviously, after price took out that buy side target on the 4-hour time frame, what we saw was price traded back into the range, giving us a bearish reset. So we have a initial expansion to the downside, a secondary expansion to the downside, and we can see that price is giving a third expansion to the downside. So on the 4-hour, we are going from level 2 into level 3. And on the 1 hour, we're also within level 3 because price has delivered a swing low. So we could either get an extension of this third level, or we could get some sort of a bullish correction. Okay. So obviously what we're interested in seeing is where price is just before the European Open and what kind of setup we can anticipate based off this. So just before the European Open, because there was a news event, so on just the European session, we can see that there was a UK core inflation data release. Okay, so obviously when this news event got released, this drove price to the downside, completing that 4-hour bearish cycle and also pushing that 1-hour time frame into an extended run to the downside. So because we've seen obviously the Asian range that we can identify here is obviously point A, point B, point C. We can see that price is giving us a bullish move outside of the range, but the next candle trades back into the range and breaks below, it's making this a purge scenario. So this is a bearish purge scenario with a very aggressive shift to the downside as a result of the red news. Now, purge scenarios, of course, we're only interested in trading a bullish reversal. Now, the context of this, of course, is that we're looking to go short, right? But short hasn't presented itself to us. But considering price is at level 3, we could also be looking to take a potential reversal trade to the upside. But with a purge reversal scenario, we do want to wait for price to take out the low of the European Open. And then from the low of the European Open, we take a 1-minute confirmation and we're going to be seeking to go long, right? So price was accumulating for the majority of the beginning of the London session, right? And then later on down the line, price takes out that low of the European Open. So we're just going to, just go back here. This exact moment, price takes out the low of the European Open and then proceeds to give a break of market structure right here, right? So this is a break of market structure. Okay, break of market structure with, of course, anticipating a retest of one of two things, the breakout or the last down close candle. But given that price obviously closed above the swing point, our interest is to go long at the breaker. Stop loss goes 5 pips below the low. Okay. Right, and we're looking to go long from the breaker with a stop loss 5 pips below the low. Now, in this case, of course, we want to take our long, but we want to be careful. You don't just want to aim to trade to the close of the imbalance. Price is broken below the H4 SST, so this could act as an area of support. We also have various short-term highs that we've created right here. So because we can get a 122 to, let's say, this short-term high just below the H4 SST, I will say this is an advisable place to take that first, to aim to take that first profit target. And then as a secondary objective, there's the 1 minute 800 EMA, which coincides with where the H1 SST that was broken is. So you could either aim to take your secondary profit at 800, or you could aim a retest of the 1 hour SST target. So price trades into the breaker, so trades into that entry point, and then of course begins to rally, right? And then eventually, because obviously, again, that overwhelming bias is bearish because we are within that level 3 expansive leg. So this is a very low probability scenario. So it's no surprise that obviously price came up and just kept trending downwards and took out the stops. Now, considering the timing, because this happened just after the trading hours, there is absolutely no re-entry opportunity on this, okay? So if you obviously evaluate the context and decide you don't want to take this trade based on the context, that's obviously advisable because you want to either be selling in level 3 or you want to wait for that level 3 accumulation to take place. And then you're looking to buy after price purges the low of the accumulatory range or buy after price breaks away from the accumulatory range. But these kind of scenarios where price is in level 3 and hasn't really defined that swing point, especially on the 4-hour time frame and the 1-hour time frame, right? It's a very low probability scenario to go long in, okay? So this was the setup anyways that would have presented itself on Wednesday. Now let's go into Thursday. So going into Thursday, we can see very clearly that obviously price is giving us an extended bearish session, which is obviously traded not only it closes imbalance, but also closes imbalance and traded into this imbalance and close this imbalance down here. So you can see that price has closed multiple imbalances on the daily time frame. So at the close of Wednesday's trading session, the new draw on sell side liquidity on the daily is of course going to be the swing low down here, okay? And the draw on buy side liquidity would obviously be this imbalance up here, okay? We've seen more than 3 days of drop, so we can be anticipating some sort of a bullish correction, but we're obviously going to be looking to trade in line with our lower time frame biases. Okay, so obviously going into just before the European Open on Thursday, we're looking on the 4-hour time frame. We can see that price has delivered finally 3 bearish expansions. We can see that price is beginning to give some sort of correction because again, price could either trade, leave a low, take a lower low, and then reverse, or price could correct and then reset. So At this point, obviously, price is traded into this imbalance. So next run buy side liquidity on the 1 hour time frame is this imbalance right here, and the next run sell side liquidity is this imbalance down here. Okay. Now going on to the 1 hour time frame. So again, we've seen the prices delivered on 1, 2, 3, and then an extension of that third leg. And then obviously, like after that extension, price accumulated for a bit before giving us a corrective reversal. So just before the European Open, so I'm just going to forward play this to then. Right, we can see the price. So 1 second. Right, so we can see the price has delivered 2 bullish expansions to the upside. Okay. Now, there's one of two things we can anticipate from this point onwards. We can either anticipate for price to give a third expansion into our general AOI, or we can anticipate price to give a bearish reset based on the fact that the bias is still very much bearish. And on the 4 hour time frame, again, price is delivered that third leg and corrected, so price will deliver a lower low before reversing to the upside. So taking a look at the 15 minutes time frame, so now what we're interested in seeing is, again, what kind of setup that we're going to get in line with either a potential bearish reset scenario or with a potential bullish continuation to give us a third bullish expansion to the upside. Okay. So obviously what we're looking at here is a bearish break. So this is our initial range that was formed. Price is giving us a bearish break outside of this range. Okay. So just before the London Open, our AOI, or our area of interest rather, is going to be this bearish order block right here. Okay. So London Open, what we're interested in seeing is for price is now traded into that H1 SST. So we do want to see price obviously trade into that bearish order block. And then on the 1 minute time frame, after price trades into the bearish order block, what I'm interested in seeing is a 1 minute break of market structure to the downside. So which is pretty much what I can see here. Just a second, just zooming into this for you. Right, so we can see that obviously price traded above the high, gave a break, bearish break to the downside, kind of a break of structure, classical break of market structure with a breaker created. So again, the setup in this is to seek to go short at the breaker with stop loss going 5 pips above the high. Simple as that. Short at the breaker, stop loss going 5 pips above the high. Okay, there we go. And then of course the first target in this scenario, because again, this could be a potential reset scenario. So I'm just going to go down to the 5 minutes time frame just to see what other targets we have, as well as the 15. Because a lot of the time it's nice to look for the 800 EMA. So obviously we have the recent low that was created. So I believe this is a very obvious target because on a 4 hour time frame, price could simply trade back to this recent low that was created in the previous session, right? So your primary target again, so we're just looking at this, we can see that there's an imbalance right there, and we can see there's a swing low down here. So I'm going to go for a 1 to 2 R to R at the swing low. And then the secondary target I'm going to go for is a 1 to 3, 1 to 4 at the recent low, which is where that H4 SST is. Okay, so simple as that. So go down to the 1 minute time frame just to see how this actually played out. So this is obviously your textbook entry at the midpoint of the breaker with your stop loss going 5 pips above the high, anticipating a BRC continuation to the downside. So we can see that price traded into that breaker would have triggered your entry at the breaker. And then eventually gave a continuation to the downside, hitting that first target at the intermediate low, and eventually proceeding to hit that secondary target at the H4 SST, completing the current trade. Okay, so Thursday was a successful BRC opportunity where price broke below the bearish order block, retested the order block, and then proceeded to give a bearish continuation to the downside. So Thursday trading session, we've seen yet another session of price falling. So going into Friday at this point, because Fridays are usually the days you can't anticipate reversals, what I'm anticipating is some sort of a reversal. The new drawn buy side liquidity is going to be this imbalance. And of course, our sell side liquidity is going to be still the swing low down here. So going down to the 4-hour time frame, what I'm now looking for here is again where we are within the current cycle. So just before the European Open, I can see the price has delivered on 3 and 3x. So we've seen 3 bearish expansion with an extension of that third leg, and price obviously traded back into the range with the next draw on buy side liquidity being this imbalance right here, and the next draw on sell side liquidity being this swing low down here. If we go down to the 1-hour time frame, so again, I'm just going to drag these along. We can see very clearly that price has delivered on 3 bearish expansions. So we saw, again, 2 bullish expansion resets, short bearish cycle. And after the bearish cycle, we can see that price is beginning to give that bullish move again, right? So we're seeing this is the accumulatory range from this low to this high, right? And then this is the first official expansion outside of this accumulatory range, okay? So again, at this point, bias is going to be either bullish from the sell side target or potentially bearish from the buy side target. 4-hour time frame is giving us an indication that bullish obviously could be the better direction in line with our level 3 cycle. So if we go down to the 15 minutes time frame, let's take a look and see what kind of setup that we're going to get. So just before, so obviously what we're interested in is seeing is a break outside of the range. So we can see a bullish break outside of that range in the European Open. Our area of interest is of course going to be this bullish order block, okay? So considering that price is level 1, we could anticipate potential bullish continuation in line with this bullish break, or we can anticipate price to give some sort of a bearish reset to the downside. So price trades into that bullish order block, and what I usually would look for the bullish order block is a potential 1-minute break of market structure. But price trades into that order block but fails to deliver on a 1-minute break of market structure. But then again, price obviously gave a bearish shift to the downside. So in this case, because again, we see a big shift to the downside where price closes outside on the other side of the order block, our bias now changes from a 1-minute, so from a BRC to a 15 minutes BRR, where our new AOY to go short would obviously be our 15 minutes breaker. So now that price is closed away from the order block and this order block has now become a breaker, what I'm interested in seeing is a retest of that breaker, right? So retest of the breaker, and then I'm then looking to go short from the breaker back down to the recent low. So essentially what happened for the duration of the session on Friday, I'm sure some of you guys were seeking to trade this, is that price obviously traded towards the breaker, but didn't quite trade into it before the end of our trading session. So our trading session obviously closes at 6:30 maximum, so 6 a.m., 6 p.m. UK time is when we stop trading. 6:30 is sort of an allowance that we give in case price is close to an AOI. Price doesn't quite trade into that AOI and then proceeds to give that sort of bearish continuation that goes into the New York session, okay? So that was on Friday. So Friday, unfortunately, there wasn't any setup because price failed to retest our AOI. So just to give a summary, as you can see, we did have quite a few setups this week. So on Monday, we did have a day where price gave us, where's Monday? Let's go back. There we go. So price gave us a BRC, where price gave a bearish break outside the Asian range, retested order block, and gave a continuation into that H4 imbalance. Tuesday, there wasn't any opportunity for us to really engage in because price only took out the H1 and H4 BST during the New York, just after our trading hours. So we couldn't really engage in this. And then Wednesday, price obviously gave that bearish shift to the downside. We did seek to engage in this as a purge reversal, but that resulted in a stop out. And then obviously going into Thursday, we had a very nice BRC setup to the downside, where price broke the Asian range, retested the order block, and then obviously gave a continuation to the downside. And then Friday, again, we're seeking to either trade long in line with a potential reversal, but there wasn't any 1 minute confirmation at the order block. But the price proceeded to break below the order block, giving us a confirmation of a 15 minutes BRC, the BRR. So our AOI is for price to retest the breaker, which it failed to do. And obviously, at the end of our trading session, price had given that continuation to the downside, which is what we would have been seeking to trade. So Friday, there wasn't any setup. So that sums up my overview of the setups that took place between Monday the 17th of July up until Friday the 21st of July.